I'm not really, I really don't care that much when a loss comes into play. What just becomes a little bit more frustrating, and just to be honest with you, Legends, is that when I don't get the ability to mitigate my stop. And as I've released a video on that the other day, and I hope you Legends benefited from that immensely with regards to how to mitigate your risk exposure. If you guys didn't, please let me know. I'll make sure I get that video over to you. For me, I don't care necessarily about losses. Like I said, if I get this trade, I'll take it 10 times out of 10. We have to always be mindful that we're playing the statistics, we're playing the probability. That's the most important thing. Just what's not favored is that when this trade took place, this candle was unable to break either this low or the low in the bigger structure. And the reason why I'm saying that is if I go back, we can see that in the grand scale, this is the structure that you are dealing with. So if we broke that low, that would be your new lower high, in which you could take this stop and you could adjust it to the newest point. Or even in this shorter term impulse that's taking place right in here, you can see we have a high and a low. The moment that this low breaks, you do have a new lower high, which means I could have also taken my stop and put it to break even, which is most likely what I would have done, especially in conditions like this. And so those were just really the non-favorable things with regards to the week. It was the halts that had taken place that created unstable conditions. It was the flash crash that had taken place, which really shook up a tremendous amount of setups, which, caused for the lack in inactivity. And lastly, it was the fact that I was unable to mitigate the risk associated to me. But like I said, I hope that these scenarios are painting a huge picture for you Legends. And that picture should be that if you are embodying that concept of preserving your capital, living to trade another day, selecting those right and appropriate trades for you and your P&L, and lastly, committing to the things that you do have in control of, such as risk management, such as some other variables that I choose to really embody. Some like to play a little bit more aggressively with holding over the weekends, trading against trend and things like that. But regardless, that first one that I'd said, proper money management, you should still be rocking. And that should be the big lesson. And so this week, I am definitely looking forward to this week. Hopefully Sunday in just 40 minutes, we don't open up with some massive movements. And, I hope that come on Monday, we don't see anything too crazy. But once again, nothing is granted, nothing is given. So what I will urge you Legends to do is, as we are approaching that New York session, if you do start to see the equity market starting to drop once again to 5%, 6%, maybe close to 7%, expect a halt. Because you Legends now know the threshold, 7%, 13%, and 20%. 7% and 13% are 15 minutes apart. 20% is the remainder of the day. And so all in all, I am looking extremely forward to this week. Let's get into the trades, why I decided to take the trades that I did, and then let's talk about moving into this week. So like I said, 3 trades to start. GJUSD. Pound yen was the first trade that was fired away at. It gave a little bit of a head fake, and I'm not going to lie, Legends, it felt very interesting to say upon the open within less than an hour saying, hey, we're up almost 150 pips. That was quite interesting. I do want to touch base on one thing real quick, though. Someone did ask me, and I just want to make sure that everybody's 100% on it. They were saying, wow, you have such a large stop. It's 260 pips. Please keep in mind that I don't want large stops. I'm simply putting my stops above points within structure. And so ultimately, it's not up to me. It's up to the structure. But be mindful that whether you're risking 1% at 260 pips or you're risking 1% at 50 pips with regards to the stop, your exposure is still 1%. So don't focus on the pips per se, focus on what the risk is exposed to you. I always include a risk calculator inside of the signals if you ever do need help with regards to figuring out how you should be risking, what the percent should be or what you would like the percent to be. And so just always be mindful. Don't ever focus so much on the pips, focus on the risk. All right. So get into it. Pound yen to start. Obviously, you can see that the trade ended up going through. And in a structure like this, I'm not too beat up about, mainly for the fact that I was very much aware of the arguments that were taking place. And what I mean by that is, if I do take this replay button here and I do go back a couple candles, what we can see, and the Legends of my platform know this, and I hope that you Legends have been picking up this as well as we're doing these weekly recaps, we're breaking out of a daily point. And what I mean by that is we're breaking out of a point within structure here that is upholding this bullish momentum. What you learn is that structure is what ultimately dictates whether you see continuations or shifts within momentum. Now, obviously, we can see that we are descending here, but the movement in itself is breaking a daily point. And so if I do bring your attention here to this little illustration, you can see that when we do break, the break is always going to be an impulse. And for a trend to take place, you always do need some type of pullback to develop your lower high for a potential lower low. Or in the understanding of a trend, right, you do start with a high and a low. You need a lower high to take place for a lower low. You need the third, and the fourth point to take place as the impulse create your initial two. So like I said, I was very, very much aware of what could take place, because if we go back and we look at it all, we can see that this movement in itself is definitely an impulse. And if you actually look at it from a daily's perspective, we are in fact getting below this higher low. But what that means is, because, you know, the characteristics of price, it could actually pull all the way back, not only into this low, but even higher into this lower high. And as long as it doesn't break this point here, you could still look for sells once more. And so I was very, very much aware of that. Like I said, I wasn't so upset with regards to the loss. Losses are cool, but let me at least mitigate that exposure. Now, at times, things like this happen and there's nothing you can do. This is once again why it's so important to leave your emotions at home. Don't allow them to be, brought into what you're doing with regards to this, and really just allowing the statistics of your approach to do the work. Some weeks are obviously going to be lights out. Some weeks are going to be a little bit more of a battle, and some weeks you're going to get these unexpected instances that do take place. You got to take everything with a grain of salt. Like I said, we're not looking to make our billions in one day. We're looking to do it through a course of time. And so going into it, I was very much aware that we were just breaking this higher low here and that it was just an impulse. But going into the executional side of things, what I did end up doing, and just taking it back to the entry for a second, I did look to the left to find a previous point in structure in which I was looking to continue to invalidate this ascending momentum. I did in fact pick this higher low that you guys can see as of right here, and I will zoom in for you guys. That was the point in which I was looking to get rid of. Just so you guys understand, in order for a direction to continue, you must continue to get rid of an opposite. You can never continue to get rid of itself to continue a direction. You always have to get rid of the counter. Always remember, there's only two ways that price can move. It can move up and down. For the down to take place, you got to get rid of the up. For the up to take place, you got to get rid of the down. So if we're trying to descend, we got to get rid of this ascending. That was simply what I was looking for. Now, we do get our entry as normal, but you guys got to really feel comfortable about, especially on how I'm firing away at trades. I do take every single entry exact same way. It's more so about understanding that regardless if the entry is the same, the conditions surrounding the entry, the characteristics surrounding the trade will be different from time to time. Most important thing is to understand the counters associated to it and be moving from there. And so what you legends can see is that upon the entry, we did, like I said, a wick down almost 150 pips, pushing all the way to the first target. I was just a little more upset, not upset, but just frustrated that we were unable to break either low, not allowing us to move our stop. Now, like I said, you guys can see that we were in a bit of consolidation for a bit of time, and then ultimately we did just see price start to leg back. It is what it is. I'm not too upset about it. Like I said, this candle was during the time in which they halted markets, and it is what it is. Simply nothing you can do. Ultimately, price simply did what I told you was going to take place on the daily time frame. It pulled back into an area where it grabbed orders, and then we did in fact see a further movement back down. I actually was looking for a re-entry for us to take this another leg back down. Unfortunately, I just didn't find one, and it is what it is. I want you legends to always remember that even though I'm a little bit, annoyed that I'm not getting enough trades involved, I am never going to fire away just to fire away. I'm a big believer in that quality over quantity. And so the criteria has to fit. It has to be met in order for the trade to be pulled. And so this was GBP JPY. It's, like I said, it's nice to see that the idea went through, and that's the basis of the argument we were getting involved in. And I even wrote that down in my notes. My legends that I work with know this as well. This is just the type of trade in which you could lose the trade and still be very much right about the concept of the idea, mainly for the fact that you are trading the impulse And so remember, the impulse is only consistent to 2 points. For a trend to actually develop, it will have to pull back to develop your lower high for a lower low. That is where people like to say liquidity grabs, continuation pattern, bear flag, profit taking, all of that. It all goes back into the basis of what a trend is. And so that was GBP JPY. It was actually just a JPY week for the entire week, because the next trade that we decided to fire away at was NZD JPY. That one went through, and that went through really nicely. And I was talking about this earlier on the live training. Volatility is not